Our guest today is a noted dairy economist, Nate Donnay, who's the director of dairy market insight at StoneX, the international financial services and brokerage firm. We're pleased that Nate not only is speaking with us today, but he's had these conversations with us before. He writes a regular column for our Dairy Business digital magazine, and he's very active in the industry with his newsletter and his other forms of communications with organizations and clients. Nate, welcome to Dairy Business Update.
Thanks, Joel.
Well, the $64 question at this time of year is, what are milk prices going to look like for dairymen as we look ahead to 2022? And you're giving me that smile that we often get from dairy economists who are posed that same question. And you can offer the necessary provisos as you feel constrained. So I'm going to be quiet and let you jump into what the market might look like next year.
Sure. At this point, the futures and most forecasters and everybody seems to be in alignment that next year, 2022, is going to be a pretty good year for dairy prices and farm gate milk prices. The big driver is simply supply. Early this year, late 2020, we had this big increase in feed cost, and it was clear that that was going to feed down to the farm level, and we would see milk production growth slow down in the US and Europe and other parts of the world as well. So we were looking for a slowdown in milk production in the second half of this year, but the decline has been much bigger than expected. In the US, we've lost 107,000 cows in the past 5 months. That's a 1.1% contraction in the size of the dairy herd. That's not record big, but the last time we saw anything close to that was 2009. So we've seen a bigger than expected drop in cows here in the US, a bigger than expected drop in milk production. But it hasn't just been the US. Milk production in Europe has been running below year-ago levels during the second half of 2021. And it doesn't look like they're going to recover until maybe the second quarter of next year. And then on top of it, even in places where they aren't real sensitive to feed cost and where the farm level finances are very, very good, like New Zealand and Australia, milk production there is running below year-ago levels as well. I struggle a little bit to explain why milk production has turned out as weak as it has been basically across all the major dairy exporters. And the only thing that you can really point to is, and especially in the US, is an increase in costs other than feed, because we have seen feed pull back from the highs that it was at early this year. But if you start working through the numbers and you make some reasonable estimates, energy costs for US dairy farms are probably up somewhere in the range of 50% from last year. Labor is probably up 7 to 10%, feeds up 20 to 30%. And you start adding all of that together, and it may have boosted the cost of production for US dairy farms by $3 a hundredweight this year. So the big question that we're grappling with in forecasting supply right now is, what does the cost of production look like for dairy farms in the US and globally right now? And how will that impact the milk production forecast for next year? Because right now there's a lot of belief that milk production is going to stay constrained due to the higher input costs, due to environmental regulations in Europe and New Zealand. We won't see as big of a response to these good milk prices. And milk production will stay tight through a good chunk of next year. I guess you asked specifically for milk price forecast. I haven't said anything about the exact price forecast. I'm a little bit bearish on class 3. We've been producing a lot of cheese. We have new cheese production capacity that's online. Even at the end of October, our cheese stocks were still up 8% from last year. So I'm a little bit more bearish than the futures. Futures are currently around 19.50, closing in on $20. And my forecast is closer to $19 class 3. I am bullish on the class 4 though. We have butter prices in Europe over $3 a pound. We have skim milk powder in Europe and New Zealand at $1.67, $1.70 a pound. You know, the US is going to be at a discount to those kinds of prices. Don't get me wrong, but $21 class 4 is not unreasonable expectation for a 2022 average. So that kind of works back to a farm gate milk price national average of 21 to 21.50 100 So pretty good. The concern is what has happened on the cost side of the ledger.
The question that I might ask, you mentioned exporters and the exporting countries, which of course the US is an important one now. What are the disruptions in the export market? Are they going to get smoothed out a bit in the year ahead? Is there going to be some, I'll call it return to normal opportunities to move product around? How do you assess the export market?
Sure. I was at the ADPI ingredients seminar last week, and most of the discussion, most of the agenda and speakers were talking about the supply chain issues. And there's not a lot of hope, not a lot of optimism that this thing is going to be solved quickly. I saw today one of the major shipping lines was expecting maybe June, July next year, things would start to smooth out. At the same time, China's concerned about importing the coronavirus, and so they're going to leave containers sitting at the port in quarantine for 3 weeks instead of the 2 weeks that they have been leaving them there. That's going to slow things down. And we've seen China continue to hold on to their zero tolerance policy for COVID. So anytime there's an outbreak, they basically shut the city or the port down for a couple of weeks and force everybody to quarantine. So I have some concerns that with the Omicron variant and its ability to very quickly spread, that China could be instituting more shutdowns, and those may slow things down. So the answer is no. It doesn't look like much is going to improve in the near future. But I think the optimistic thing is that despite all of the logistics issues, and there are considerable logistics issues, this year we're looking at record exports of most of the dairy products, and we're going to hit a record exports in terms of milk solids. So the co-ops and the traders and the exporters are jumping through those hoops, and for the most part, they're keeping the product moving.
One other quick question that I might ask, as I sit out here in California, where class 4 is so important, and where the spread, the negative spread between class 3 and class 4 earlier this year caused a lot of concern with negative ppds. Your price forecasts sound like negative ppds won't be the issue in 2022 that they were this year.
No, I don't think so. The only issue is, so when we look at commodities, we try to first determine whether we're dealing with a flow commodity or a storable commodity. And butter and skim milk powder are pretty storable. But cheese, the only cheese that could be traded on the CME spot market is fresh cheddar aged between 4 and 30 days. Once it's 31 days old, it's no longer eligible to trade on that spot market. So if we have something that really tightens up fresh cheese, let's say some big export orders with the US market in the $1.80s and the world market at $2.20 a pound, if somebody were to get some very big export orders, we could suddenly tighten that cheese market and spike that class 3 for a month and get a month of negative ppds. So I'm not going to rule it out. Certainly we've learned anything in the past 2 years is possible, but that's not my expectation. My expectation would be that class 4 is going to be running above class 3.
Well, Nate, Donnay, we appreciate you taking a few minutes to share your thoughts with us. We're delighted that you're going to be contributing a regular column to Dairy Business in the year ahead. We always look forward to your insights. Thank you very much for being with us. Nate Donnay of StoneX.